Hey everyone, welcome back to CryptoCache. Thank you very much for joining me here today. I hope you're having an amazing day. Happy Saturday. We're going to take a look here at OGN, Origin Protocol, and see what's going on. Big picture, awesome stuff here. Absolutely hitting right where I was expecting, but also surprising too. It shot up a lot harder than I did expect as well too. So again, all good stuff if you think about it, depending on how you look at it, but we want to make sure this is a healthy continuation and to see how much more gas is left in the tank. Okay, we'll take a look at that and much more. Obviously, I'm not a financial advisor, so I hope you can learn something here today, of course. My goal is to make sure that you are a better trader, right? That's just the end of the story there, my end goal. So if you want to become a better trader, CryptoCache.tech, I've got a trading academy, trading community, and essentially a really awesome environment for you to be able to learn, collaborate, and become a better trader. Experience is out of this world, and I can't thank you enough for my current community members for all of your support over the last few months. Thank you so much. Take a look here though at OGN. Here's kind of what's going on. Big picture, we are still looking very good in the strong sense of the fact that we're up over the 200-day simple moving average. This is huge when it comes to a continuation of the upside. If we can break and close above that on the 1 day, then the likely continuation higher is there. And what I mean by that is that it creates such a strong support level on a larger time frame that it really helps us continue that as a potential support outside of just the key level Fibonacci retracement lines. Okay. Again, we haven't closed above this yet. This candlestick is still fairly fresh. We've got, what, 7 to 10 hours left of trading left. But just keep in mind, that is a very, very good sign. Okay. It's also good, of course, we're up over the 50-day SMA. That makes perfect sense. We are now bouncing, or effectively bounced, which is, it's kind of hard to say because it was such a sharp decrease followed by a sharp increase. It doesn't really look like a bounce, but for lack of better terms, we're basically using 70 as a support level and no longer a resistance. That's a good thing in a continuation pattern like we're seeing here so far. So, when we first came up over 70, tested that, it's all well and good. When it comes back up over a second time, we can expect it probably to stay above that for some time. Now, that doesn't necessarily mean the price is going to keep shooting up like it has. It just means that the relative strength of this is going to be very high, and the fact that 70 is working as a support level implies if it comes back down and bounces off a key level Fibonacci retracement level, just like it did previously here, it will continue higher. Now again, that Fibonacci retracement level previously that I used is different than the one we're using here, because the one that I have up here right now, by the way, is starting here and coming down here. What that basically just means is that it's allowing us to kind of forecast how high the price could go. It's basically a reverse type of situation. So if you're looking at the Fibonacci like, hey, that doesn't look right. Well, I did it backwards to anticipate how much higher it could potentially go versus drawing out a brand new one here because this candle wick is so large that it doesn't make a lot of sense to draw a new Fibonacci retracement line on the most recent time frame. Okay, so just please understand that. But that being said, we're using a larger time frame here for Fibonacci, helping us understand, a more larger time movement. The likelihood of OGN being $1 or higher is very high. How soon will that happen? We'll need to find out. It may not happen immediately, just based on the fact that we had a significant retracement here, but if we look at the volume and a handful of other things, we could find a case for that to happen. But just know that we are overextended. There's no other way around it. We've got 2 very strong bullish continuation days here, and once again, in most cases when you have continuation patterns, they last 3 days in a row. We saw this happen initially, so just to touch on it here, we have this continuation that I mentioned, and it was usually followed by a red day, right? Coincidentally, we had 2 red days following that. So it's very common to have 3 strong green candlesticks, 3 white soldiers, and to effectively have a 4th red day. We're 2 candlesticks into this very strong momentous trend. We could have a 3rd day of a bullish continuation, and if we do, then at that point, we'll see a potential for a 4th day red, okay? So that's just generally how that works. It doesn't always follow suit, but it does tend to happen that way. So just kind of heads up on that. We could actually have an extra day's worth of continuation, and we'll see if this is a healthy continuation or not. The thing I don't love here, of course, and this is just something I always say in general, is the fact that we are up over 70 on the RSI on the 4-hour. When you see that, that is cause for concern. That means we should probably pump the brakes a little bit and expect some type of correction. What I mean by that is when the price came up over 70 here, when you can see this, it was doing this right here, which is all well and good, right? That continuation probably hit up to a 9 on TD sequential, and then it came back down. In fact, we got into overtime there. And then the price gradually came back down to correct itself to bounce off of 50 on the RSI. That's perfect. So what we could do is we could see a return of that type of situation here, where the price effectively slowly tapers off and consolidates either here or here. In other words, 56 or 65 one of those two areas, and effectively allows the RSI to calm back down, hit 50, and take off again. That would be perfect. That would be optimal. Now, again, does it always happen that way? No, not necessarily. We could very well see the price continue sideways or up from here based on the simple fact that it has pretty good momentum. We're up over both moving averages. We're over some key level resistances at about 56 cents. So I would say worst case scenario, the price comes back down. 56 cents would be a strong likelihood of a bounce. Okay. Again, that's just something to consider. RSI is overextended, so just to kind of note that. Looking at overextension too, as far as continuation patterns, what that looks like, we want to look at TD sequential and understand. This is something that's extremely important to know. All right, so take a look at this here previously. Came up to a 9, and it continued on for 1, 2, 3, 4, 5. That was 5 total 4-hour candlesticks. So it took an extra 20 hours for this to continue to hit its high, right? So, and just so you know too, if you're not familiar with the channel, 9 on TD sequential basically tells you you're at an exhaustive state and that you should expect a pullback or a turnaround. If nothing else, at the very least, consolidation sideways. It didn't do that. It continued higher. RSI stayed up over 70, came back down, and slowly, gradually, consolidated. Look at this, coming back down to a 9, and then it took off. Okay, so again, 9s are things that you want to kind of see on the time frame. They're not necessarily good or bad. They just kind of signal reversals. We see a 9 right now. Look at this. It's followed by consolidation, however. That's a positive thing. It's just not enough yet. All right. So simply put, we're at a 9 right now. So the likelihood of the price going sideways and consolidating here before the next leg up is high. It's also equally as high for the price to continue to travel down, lose its relative strength, and then potentially bounce. The tertiary option, of course, is for the price to continue sideways, effectively lose that and bounce off 56. I think I'm rounding down. It might be 57 cents, but right in that 56 to 57 range, we could experience some type of bounce back. So needless to say, though, right now, being at a 9 right now at this point, it needs time to consolidate. I would say at least 24 to 48 hours before it legs up again. Keep this in mind, cryptocurrency doesn't always honor the laws of trading here, right? So we could very well see the price leg up once more because it is testing this resistance level multiple times, and that could effectively break soon, which would give us that third and final day of continuation, followed by a red day essentially on the 4th, right? So we're 2 out of 3 potential continuations. So I would say we are more likely based on volume, which I looked at earlier. Volume is quite high, all things considered, if you compare it with any previous data. The likelihood of this continuing higher at this point is still there. If I was a gambling person, I would gamble on the fact that it's probably going to continue higher or go sideways at the current price point and then consolidate after. But once again, a few different scenarios are in play. We could totally see a retracement soon because it is overextended. You got to acknowledge that. All right, so again, just depending on the type of position you have right now would determine what you might want to do. If we take a look at the 1 hour, something to kind of also note here as well is that if we look at Ichimoku Cloud, we have all signals here to go ahead and leave your position open. So there's really no reason to want to close or consider maybe taking profits just yet. But if another 12 hours the price doesn't go up from here, then at that point it would be a consideration to want to consider taking some profits. Again, depending on the position you have. If you're a long-term hodler, don't even worry about any of this. Just note you're in good shape, continue to dollar cost average. If you held, or say you bought somewhere in the range of 40 or 54 cents, you may want to consider a little bit of profit taking because again, it's showing us signs of overextension. Overextension does lead to retracement, and retracement essentially is a positive, healthy thing we need to see. We just don't know specifically if it's going to shoot up from here or if it's going to come back down. I do feel as if based on the continuation patterns and just the fact that it's repeating similar patterns as it has before, we're more likely to see a third green day tomorrow, or just say later today when the candlestick closes. But just know if we were to start seeing a third green candle day, we would want to expect or anticipate a 4th red day. Okay, so just trying to drive that home again. It's very common for the price to have 3 strong green days followed by a 4th red day. We're at 2 green days here. We could potentially see a 4th. If so, the last and final 4th day of trading could very well be coming down to here or somewhere in this range. It could look like something like that. All right, so again, no guarantees. We never truly know where it's going to go, but this does show us that we are overextended on the 4 hour, which commonly will consolidate or retrace. And at this point, it's looking like it wants to try to break that resistance level, at least a tentative resistance level, because right here at Fibonacci level about 77 cents, we're seeing that stopping point. The bears are saying, hey, no more, we're selling. But the bulls are like, hey, no, we got the volume, we want to keep pushing higher. The fact that we have a lot of volume even at this point of consolidation is extremely important. It does show we have gas left in the tank to continue higher. I would love to see it consolidate longer, but we don't always get what we want, right? There's a good chance we might see this continue up, especially if Bitcoin makes a push towards 43,000, which I think is likely, honestly. I think that we might see something of that state. So OGN, in my opinion, is still a great investment. I think there's still more gas left in the tank. Just be mindful of the fact that there's, it is extremely overextended, and we might experience a pullback to one of the key level supports, 56 and or 65. All right. May not happen today, but it will happen eventually. All right. So hopefully you found benefit here, of course. I know it wasn't a definitive answer, but I would say, once again, the likelihood of a third green day is higher than a significant pullback right now, just based on how it's consolidating and the fact that it's kind of trending sideways right now for a good solid 12 hours. That's a good sign. All right. Well, I hope you found benefit. Sorry if this was a circular conversation. I know I kind of said the same thing over and over again, but we're looking pretty good. We get a candlestick close today over just over 70 cents. We'll be probably looking very good because that would put us up over that 200-day SMA, and that would give us that extra momentum to continue higher. We've got the volume. We just need to see a third green day here. I'd like to see that. All right. So thanks again for joining me here. We'll cover this again tomorrow. Hope you have a great rest of your day. We'll see you the next one. If you're not currently a community member, CryptoCache.tech, link in the description below. We'll see you.